In this video, I'm going to demonstrate if using a moving average crossover strategy makes sense while day trading. And the way I'm going to do that is I'm going to backtest several different numbers when it comes to moving averages, particularly exponential moving averages, that's the EMA, and I'm going to see if it would make sense for a trader to use it in their day trading strategy. Now I'm going to give you the facts, you make your decision. By the end of this video, you're going to be able to make a determination for yourself if using an EMA crossover strategy makes sense or if it doesn't make sense for you. Moreover, I'm going to use two different ways of testing the moving average crossover strategy. The first way is I'm going to use an always in system where essentially the long trade, if it's in a long position, the only way it's going to exit if it's a short trade is enacted or executed. And conversely, if you're in a short position, the only way that's going to exit is if a long position is executed. The other way I'm going to test it is I'm going to be directionally biased, meaning I'm going to choose in my system to go long and then I'm going to choose to go short based on the crossover strategy. This is purely a crossover strategy so that you can make a determination to see if this works for you. And I'm going to change the numbers along the way so that you can get a feel as to if it makes a difference if you simply change the numbers. All right, let's begin. So the first test that I'm going to do is the EMA 5 crossing the EMA 20. Okay, so this video is not going to discuss how the code works. It's just going to show you the code as to what I've used so that you can see everything wide open and available to you. So essentially this is saying that if the 5 crosses the 20, then it's going to enter the long position if this bull, the always in trade, is selected. And I'll show you what that means. And conversely, if it's saying if the cross is happening below, the 5 is crossing below the 20, then we're going to go short. So let's begin the back test right now. And so here is the enable always in. All right, so the initial test we're going to run is not going to be directional. So let's uncheck that. Okay, and because we unchecked it, this time becomes null, but I'm just going to zero it out anyway. And we're not going to use money management features. Okay, so these features that you're seeing here are part of Price Action Harvester Automated, my other strategy, which is a very, very different strategy. I'll be happy to demonstrate that to anybody who would like. You just have to request a Zoom demo, your own live Zoom demo on pinnaclequant.com, my site. But let me just move on here. So we're not going to use move stop, which is not a trailing stop, but I won't discuss that. So we're not going to use that. We're simply going to use not even the price target because we just want to be always in. Okay, we want to be always in. So the long, once it's in there, it's only going to be taken up by the short. This is an always in strategy. Think of it as a circular trade. Okay, one takes out the other. So let's go ahead and enact it for, let's go ahead and do it for 3 years and a little bit of change there. So 3 years and 1 month. So from January 1st, 2019 till February 17, 2022, I'm ignoring commissions. You just multiply that number out by whatever you're paying by the number of trades that you see for your broker. And then I'm also going to give ignore slippage, which you will definitely have slippage. Sometimes it's positive slippage. Most of the time it's going to be negative slippage, but I'm giving this the benefit of the doubt. So let's go ahead and test to see if it makes sense. So this is the 5 crossing over the 20. We are back testing NQ. All right, here we go. So this is going to take a minute for it to load here because it's crunching numbers for 3 years, more than 3 years of data. But this is going to be an interesting test, an interesting video for people to figure out if using a crossover strategy works or if it doesn't work. So watch this video to the end. Therefore, you can make a determination and make a judgment call for yourself to see if this works or if it doesn't work. So what I'm likely going to do in this video is speed up this part because I don't want you guys sitting here waiting for the result to load. But anyway, it's loaded. So let's go ahead and see what we got. $72,000 total net profit. Does that sound good? Well, let's take a look. Let's take a look at the max drawdown. Okay, 61,000 over 3 years. Ouch. All right. Well, let's break it down. So let's see what happened. So 2019. Of course, these are hypothetical. You guys know that these are hypothetical. So 2019, 2020, 21, 22. So you would think, wow, look at my net profit at 65,000. But you were down at one point $54,000. Not you, but if you were trading this strategy, $54,000 before you started picking up again. So you took a bunch of risk at 54,000 to get there. That was in 2020, 2021. Look at that, 48,000 for a 49,000 net profit. Again, we're not counting slippage here, guys, nor are we counting this other thing that's going to ruin our day here. Okay, it's 21,894 trades. If this is the NQ and you're paying your broker, let's say $4, well, that's already going to wipe out all your profits. Because even if you just round this down to 20,000 and multiply that by 4, that's $80,000 you've paid your broker in commissions. You've made a net profit of 49,000 excluding commissions. When you include commissions, this strategy is down. So that was the 5-day. So let me go ahead and make a directional test so that on the circular trade, in fact, let me show you a chart really quickly how it looks like. Okay, I'm not obviously going to show you 3 years of data, but just to give you an idea of what's happening. So it entered a short trade there because there was a crossover. The 5 crossed below the 20. So now you see that red line has taken out the blue line. That's the 5 taking out the 20. And so it decided to go long. Well, it closed out the short trade, went long. Well, it worked for a little bit, but then it died out. It entered short again, okay, because you had the 5 cross below the 20 again, okay? So that's the idea of how the system works, and it had a total of 67,713 trades, okay? So we've done 5 and 20. Now let's do directional. Let's uncheck this. Let me show you in the code what I've done. So I've set it that if it's false, if it's unchecked, the always in is unchecked. So this bool, the always in trade, is set to false as opposed to true. Then it's looking for a position to be flat. So it's not going to take out a position. It's going to stick with the position. It's still doing the crossovers, okay? And then we get to decide the time. So I'm basically going to do it for RTH, regular trading hours. I'm in Los Angeles, so I'm going to do it from like 6:30 to 12:30, okay? Which is about right because that only gives us 30 minutes to get out. So I'm also going to have a flattened trade exit at the end. So this is the same thing on the short side. So now you see the code for that. Let me go ahead and get back to the testing. So I uncheck this. Let's start the testing at 6:30. We're going to let it run until 12:30. And then we're going to go long initially. Okay. Now we're still going to ignore money management. Okay. Because we want a pure test. We don't want to manage the money, just a pure test. We're going to move, stop, but we do have to have a price target and a stop here, okay? So let's do a couple of different tests. Let's do a 1-to-2 and a 1-to-3 ratio, okay? So let's go with, this is NQ, so it's got a lot of volatility. So let's do 70, 140, so 70 tick loss, stop loss, and a 140 profit target. Okay, and then we're not going to use special operations. Again, if anybody wants to see that, fill out the form on pinnaclequant.com and I can do a live Zoom demo to show you how my strategy works, which is not the crossover strategy. But let me go ahead and also check this. So I mentioned I'm going to be exiting. So I want to exit latest by 12:59. Okay, that's 1 minute before RTH close. So let's make sure we have all of our parameters done correctly. That's unchecked, 6:30 to 12:30. We're going long initially. We're not using money management. We're not using move stop, but we are using profit target and risk per trade. We're not using special operations because they're unchecked, but just so that nobody's confused, let's zero that out. One contract, NQ, exiting at 12:59, and we're still running it for 3 years and change, the back test. So let's see how it does directionally. So at this time, we're basically going only long. So when the 5 crosses above the 20 is what we're studying right now. So let's see what the hypothetical results are going to show us. And again, in the videos, guys, I'm going to speed this up so that you don't have to wait for this part. I'll do the waiting for you. All right. So 18,475, 4,676 trades, 33% win rate, which doesn't really matter. I've seen lower percent profitables do much better than this in total net profit. But let's go ahead and check out the analysis. So drawdown, huge 25,000 in 19 drawdown. That's the first thing you want to look at when you're doing your backtest. You don't look at total net profit. You look at max drawdown. That's how much you were down before it started to come back up again. Okay, that's your maximum drawdown, max DD. Okay, so 20 is 19,000 and change. 21 is 15,000 and change. 22 is 28,000. Wow, 22 is a horrible year so far. I mean, it's only been what is it? We're talking about less than 50 days here. Okay, and it's already down $25,900, guys. Okay, so that's really bad. Let's go and switch it to short trades. Let's see what was going to happen. So we uncheck long at this time, and let's run it. Same. I'm going to do 70, 140, and then I'll come back and retest with higher risk reward ratio. So this is 1 to 2. We'll do 1 to 3 after. In fact, let's make it easier. Let's just do it right now. Okay, so let's do 1 to 3 to 10. Let's run it again, so that we have everything nice and easy to decide upon. But as you can see, it is using a crossover is not, so far, in my opinion, not what it's cracked out to be. Okay, so that is something that we have to consider when we're trading. Do I use a crossover in my strategy? No, I do not. So here we go, 56,945. We increased it, so it's a 1 to 3 risk to reward, 70 tick stop, 200 tick profit target. So here we go, 20,000 max drawdown in 19 and 20, 16,000, 21, 17,000, 22, still bad, 15,750. And don't forget the kicker, guys. The kicker is this. You have to multiply that still by your commissions that you'd pay to your broker. So if just for take 21, the year 21, you had 1,498 trades. So let's take 1,500 trades to make the numbers easy. Multiply that by 4 if that's what you're going to pay to your broker. I don't know how much you're going to pay. Could be 10. I have no idea. So let's just say it's 4. So that would be 1,500 times 4, 6 grand. So that 15,000 net, 11,550 net profit. Subtract that by 6,000, then subtract that by potential slippage. So your profit is becoming this little compared to 17,675 in max drawdown. Is that investable? You decide. So let's do the short side. Let's go ahead and change this back to 1 to 2 ratio and run it. And again, I'm not going to use risk integrity long or short. That is something that I use in my strategy, price action harvester automated, but I'm not going to use it here, so it's a pure test. Okay, pure hypothetical backtest. This part is going to be sort of sped up in the video that you guys see. I don't want to have you guys wait through this. All right. Wow. Wow. Okay, I'm not even going to cover this. It's all red. So that was easy. So let's do 1 to 3 risk to reward ratio. So the long worked a little bit better than obviously the short, but did the long work well? You have to decide. Here we go. Not much better, guys. It's all red. It's all red. All right, the net profit's all down. We haven't even talked about paying the commissions yet. So, 5 and 20. 5 and 20. That did not work. 5 and 20 did not work. So what I'm going to do now is let's just jump to a more popular one. Okay, 50 crossing the 200. That you go long. 50 crossing below the 200, you go short. Okay, that's going to be a popular one. So I have to make a bunch of changes in different places in the code to do this. Okay, so bear with me. I'm going to do it live while you guys are watching this. I've made it as easy as I can as far as the naming convention goes in my code so that it's you can easily discern as to what I've done. Oops, excuse me. I'm trying to find the line. All right, so this is, we have to switch this out to 50. And this goes to 200. let's go back to actually I don't want that. I do want this. Keep looking. That's just habit. Okay, so let's make sure we have everything done correctly now. 50 crossing to 200, 50 crossing 200, 50 crossing 200, 50 crossing, okay. So let me compile that. You're going to hear a noise. There it is. That's the noise. So let's go ahead and run this in the circular trade I was talking about. It's not technically a circular trade. A circular trade is like a bad thing in trading. But this is an always in strategy. I'm sort of picturing it so that it's easy for you guys to picture. It's a circular type of a trade. One exits the other. Okay, so let's go ahead and uncheck that. Even though you don't have to change it to zeros, let's just make it very easy. Let's go ahead, and we're not looking for a price target. It's not going to get hit at 99,999, nor is 9,999 stop going to get hit. So, or very, 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 very unlikely for that to happen. So let's go ahead and make sure everything's correct. We're still trading NQ. Oh, we don't want to exit at 12.59. We want the trade itself to be taking us out, either the crossover or the cross below. We've still got 3 years and 1 month. Let's go and run it. Okay, this is a popular one, guys, 50 and 200. There was a study done, and you probably have seen it if you've Googled for this, that the 1340, the 13 slow and the, excuse me, the fast and the slow at 48 is another number that people have used. But at this point, we're being ticky-tack. All right, here we go. Net profit. Okay, so let's take a look at the drawdown. That is high. For example, it's still pretty high in 19, 20, 21, 22 is really high. It's at 40,000. So is 20, 40,000. That's a lot of money to be down in 1 year. But it ended up with a net profit of 85,000. So we did the 520 first. Now we're doing the 5,200. Okay, that's okay. Let's do the commissions. So 2,100 times 4. Subtract that. That's, I'm being, 4. It could be 10. I don't know what your broker charges. And then so if you add slippage to that, you might have maybe have eked out a net profit. Maybe. When I say add to it, you're supposed to subtract slippage from it. Okay, 85,000 is. Okay, so you have 2,000 times 4, that's 8,000. You reduce 8,000 from 85,000. You're still doing really well, but you were down 40,000 at one point. So is that investable? You have to decide, all right? If somebody had a $25,000 account and this hit 40,000, your account's already blown up, okay? So obviously that could be a real problem. So it's 85,000. If you had let's say you had $500,000 in the account, then you have to decide if this is good or bad. But again, we haven't counted slippage yet here, okay? Because I'm trying to give it the benefit of the doubt. Again, do I personally use crossovers? No. Okay. Why? My personal opinion is this max drawdown is unacceptable. But in any case, so let's go ahead and continue. 82,000 for 21, 82,000. Of course, don't forget the commission, and then 19,000. So that's about $800 commission. And then, so it's up about 19,000 plus, but then you have slippage, so it could be down a few thousand more, less than that. But still, this, however, at a 40,000 max drawdown, again, to explain what I was saying earlier, if you had a $25,000 account, you've been blown up. Okay, that's not good at 40,000. So, and why am I saying 25,000? A lot of people tend to have that account when they're day trading on the retail side, obviously. So let's go ahead and do the directional. Let's just jump into the directional and see what that's going to do. So all we have to do for that is uncheck this, and then let's pick a time again, 6:30, 12:30. Okay, that's my time, Pacific Standard Time, so that would be 9:30, 3:30 Eastern. So let's go long. We're going to ignore money management, ignore move stop, but we do want to target. So let's do 1 to 2 first, 140, 70. I want to exit at 12:59 latest. I want to flatten everything if I'm not out yet. 3 years and 1 month. Let's review the parameters again. always in is unchecked. 6:30, 12:30, we're going long. All right. So let's remember those numbers, 10, 85, 82, 19, because we're going to compare that with the long here. Now again, those two numbers were comprised of being long and short. So we're just going to pick on the long side first, then we're going to pick on the short side, okay? We could run it together, but the results become murky when you do it that way, because we're trying to isolate at this point. It does make sense in many occasions to run it at the same time, okay? To check both long and short, whichever comes first, okay? But we're trying to isolate. So for the purposes of this hypothetical backtest, it's better to isolate it. All right, so when we pick directionally long, those are the results, okay, between 6:30 and 12:30 Pacific Standard Time. Your max drawdown is pretty horrible in 21 based on the net profit. I mean, it's negative. So obviously, is that investable? Is it not investable? You decide. Let's go ahead and do a 1 to 3. So that's 70. That's 1 to 3. You know, we could also do, I'll do one more test because the 5200 is popular. I'll do 1 to 4 as well on a risk to reward. And so that's a popular one. A lot of people think about that one. And so we'll do a test, figure out, at least I'll make a presentation to you if you can, if this is something you want to invest in or not. I'm not offering this, guys. So again, my strategy does not use any crossover. Okay. So it's 13,000, 21,000, 2,000. It's a loss this year. So multiply that. You've got about $1,000 you have to subtract from there plus slippage. So 19 and 20 did okay. I mean, it's up to you to decide if that's something. 20s, the max drawdown is acceptable in my view. But that's my opinion. As far as the drawdown here for the net profit, you know, the way you would make a decision like this is you would compare that to, you have the same number of trades happening in 21, approximately, obviously. It's not going to be exactly the same. But in 21, it was horrific as far as the max drawdown when you compare it to 2. So that's part of your decision process, okay? It should be at least. So that was long. And let's go ahead and take a look at short. First, let's do 1 to... Actually, I said I was do 3. Excuse me. Pardon me. So let's do 1 to 4. So let's add another. So that's 280. So 1 to 4. Let's run it again. And I'm doing this because this is popular, guys. 50 to 200 is pretty popular. You've seen this. You've heard this probably on CNBC. Okay, these two numbers. Especially it's popular if people are using it on a daily chart. This is a 1-minute chart. So day traders, you know, they're not going to be using a daily chart to make their day trades. They can obviously write code or reference higher time frames like the daily, but when you're trading, you're not trading the daily if you're day trading or scalping. So, I mean, we just gave it a 1 to 4 and results got pretty bad, okay, relatively speaking, when we compare it to 1 to 3. So there you go. 21 is 10,500 drawdown, 15,000 at 257 trades. So minus that from the 15,000, so about 1,000 off on the commissions. Plus you have slippage, you have to take a few thousand off for that. And then this year would have been, so far, it'd be losing pretty badly. So let's go ahead and switch to, excuse me, that was short. My apologies. I'm going to uncheck that and run it again in long. My apologies. So we already know what the results are going to be for short. Let's go ahead and run it in long. I'm doing this test for the first time with you guys. So I've done this test before myself years ago when I first started writing strategies, and it totally failed back then. I don't expect it to be any better now. So I haven't even looked at it. This is my first time looking at it or even considering it because it's becoming more popular now to talk about crossovers again. It had died down for a little bit, becoming popular again. So there it is for a 1 to 4, 70 tick stop, 280 tick profit target, long directional bias, 6:30 to 12:30 Pacific Standard Time. The 1 year that's standing out is 2020, but you compare that to 21, which had exactly the same number of trades, 286. And it's down. In this year, it's down. And then you had a pretty sizable max drawdown in relation to the net profit, especially that we're excluding slippage and commissions. So that is for long. So we're done with long. Now let me do short. We've already done 1 to 4 for short. We saw how bad it was. So let's see if it gets any better if we do 1 to 3 and then 1 to 2. And we will be done. And you can make a decision to see if this is something that you want to use or not. Okay, so a lot of people still reference this. Again, it's something that you may want to look at if you're doing a swing trade where you potentially could be holding for a long time or at least several days. You know, swing is a relative thing. So some people look at it as several days. Some people look at it as several weeks. Some people several months. It all depends. And so 1 to 3, net profit is down 3 out of the 4 years. So we can stop looking there. 140. So now it's a 1 to 2 risk reward. So long is technically working better than short. So when you compare one to the other, long in relation to short directional bias is working better on the crossover. So the cross below is not working as well as the cross above. Is the cross above working well? So far, in my opinion, no. But you have to decide. I only present the facts. So that's 1 to 2. And that's it. That is it. So what do we have now? We are at a place where you have to make a decision if this is something that is usable or not. And I plan on making other such videos with other indicators. There are about 30 or 40 more that I'm going to be covering. If you have an indicator that is not native to NinjaTrader but is still free, and this is NinjaTrader 8, if it's still free, so I can go and download it from a website or a forum, someplace that's free, I'll see if I can download it. If their strategy is open, I can see the code. I'll go and I'll turn it into a backtest, and we can make a presentation, and you can make a decision as to if it's tradable, investable, or not. Until next time, God bless.